Hi everyone, I'm Prateek and today I'll be presenting my views on Valterra's cross-listing and global capital strategy. My research focuses on Valterra Platinum Limited's financial moves following its demerger from Anglo American, especially its decision to cross-list on London Stock Exchange, and what this tells about modern global capital flows. My research emphasizes on practical financial outcomes, market behavior, and capital strategies. This isn't just about a company listing its shares. This is a real case of how global finance operates when a resource-rich company opens its doors to international investors. Now, coming to the company overview, Voltra Platinum emerged in 2025 after being demerged from Anglo American. It listed first on Johannesburg Stock Exchange and then cross-listed on London Stock Exchange. This dual listing provides a unique case of examining real-world international finance issues such as capital market, investor behavior, capital access, and stock market performance through the lens of company that is focused on platinum group metals. Voltra is a mining focused company based in South Africa. It operates in Bushveld complex. It's a region known for its rich deposits of platinum. Anglo American exited this unit as a part of strategic shift, and Voltra was born as an independent company. Its financial strategy emphasizes on capital discipline, shareholder returns through dividends and buybacks, and a strong ESG commitment. Let's now take a look at why Voltra chose the cross list and especially why it chose London Stock Exchange as its secondary market. Cross listing offers a range of financial and strategic benefits. First, it significantly broadens the investor base. By listing outside of its home market in South Africa, Voltra can attract global institutional investors who may or may not have direct access to Johannesburg Stock Exchange. This helps the company to tap into larger capital pools, especially those based in Europe and the UK. Second, cross-listing enhances liquidity and trading volume. With more investors able to buy and sell the stock in different time zones, the share it becomes more attractive both to retail and institutional traders. This increased liquidity also improves price discovery, leading to a more efficient valuation of the company. Third, there is a reputational benefit as well. A listing on London Stock Exchange lends international credibility. It signals to the market that Voltra meets high regulatory and governance standards required in the UK and that it's also prepared to compete and perform on a global stage. Moving on, the next big question that came to my mind was why did Voltra choose LSE over other global exchanges like NYSE or those in Asia? There are a few key reasons. First, the London Stock Exchange is historically one of the world's top destinations for mining and resource companies. Investors on LSE are already well versed in mining equities and many of them have long-standing exposure to Anglo American and its subsidiaries. So Voltra it already had a ready-made audience in there that understands the PGM sector and its dynamics. Second, the London offers strong regulatory integrity but remains accessible as well without some of the cost and compliance complexities of the US listing. It also provides high visibility with the major mining indices and analyst coverage that could include Voltra over the time. Lastly, this decision aligns with Voltra's legacy investor base. Many institutional investors in the UK held Anglo American shares and wanted continuity in their exposure to platinum group metals. By choosing London, Voltra ensured these investors could retain and even increase their stake in a focused, high performing spin off. In short, cross-listing on LSE was a calculated move to balance global capital access, market credibility, and also investor familiarity without the regulatory and financial friction that might have come from other exchanges. Let's now take a look at how Voltra's stock actually performed since its listing, both on JSE and LSE. Starting with JSE listing, Voltra debuted on May 28, 2025. Initially, the share price was quite volatile, This was mainly due to passive selling by index tracking funds. Because Voltra was newly listed, it wasn't yet included in major indices, so many automated funds had to offload it regardless of its fundamentals. However, despite a rough start, the stock quickly rebounded. By late July, it had gained nearly 68% year to date, trading around South African rand 948 to 960. That's an extremely strong performance for a new listing. One of the major factors behind it was 20% surge in platinum prices during the same period. As a pure play PGM company, Voltra's value is very sensitive to commodity prices, and this tailwind significantly boosted investors' confidence. On the London Stock Exchange, where Voltra listed just a few days later, on June 2nd, 2025, the story was similarly strong. The stock opened at approximately 29.30 pence, with a market cap of around 7.7 billion euros, or roughly around 10.45 billion USD. Within the first hour of trading, it was already 4.5% up, indicating strong early demand and a positive reception from the UK market. Several factors that had helped drive this momentum was first, institutional confidence. Investors like the government structure, the clarity of Voltra's dividend policy that we'll talk about later, and clean break from Anglo American broader portfolio. This helped it a lot. Second, the platinum rally continued to support the stock, attracting interest from commodity hedge funds and mining focused portfolios. Third, there is also valuation alignment effect. Having listing on both JSE and LSE allowed more accurate price discovery and helped close any valuation gaps between emerging and developed markets. Let us now take a look at Voltra's financial strategy following its separation from Anglo American. As a newly independent company, Voltra has made it clear that it is focused on financial discipline and capital efficiency. The company has outlined a strategic plan centered around three key areas. First, there is a strong emphasis on free cash flow optimization. Voltra is streamlining operations, prioritizing profitable ore bodies, and minimizing unnecessary capital expenditure. This is especially important for a PGM company where commodity cycles can be volatile. Second, the company has committed to a 40% dividend payout policy, which sends a clear signal to investors about its long-term cash generation ability. In addition, management has indicated that they'll pursue opportunistic share buybacks whenever the market conditions are favorable. This flexible capital return policy increases investor appeal, especially for institutional funds that prioritize the stable returns. And third, Voltra is also positioning itself strongly in terms of ESG. It has adopted sustainable mining practices and committed to proactive regulatory compliance in both South Africa and in UK. The dual market compliance ensures it meets the expectation of global investor base. Taken together, these strategies show that Voltra isn't just riding the platinum rally. It is actively building a resilient financial platform that supports long-term shareholders' value. Last but not least, let's talk about global capital and market integration aspects of Voltra's cross-listing. Cross-listing wasn't just a branding move for Voltra. It plays a crucial role in global capital flows and financial integration. Firstly, the dual listing improved the capital mobility. Investors from South Africa and UK both now have direct access to Voltra shares, enhancing the trade volumes and increasing liquidity. This broader access reduces the company's dependence on any single regional capital pool. Secondly, it improved market efficiency. Since the stock is listed on two exchanges, arbitrage opportunities between the JSE and LSE help align valuations. This allows the market to more accurately reflect companies' real-time value based on global supply-demand dynamics for platinum and PGMs in general. Thirdly, Uh, while the cross-border listing does introduce currency exposure, but it also adds a layer of resilience. Voltra can now raise capital in multiple currencies and hedge risks more effectively, especially when commodity cycles diverge across regions. In short, Voltra's move reflect a broader trend of financial globalization, where the companies use cross-listing to tap into diversified capital markets, enhance price discovery, and increase resilience, all of which are themes of international finance today. Coming to the conclusion, Voltra's cross-listing was a strategic move that enhanced its market presence, funding options, and global relevance. It stands as a valuable example of financial globalization, dual market integration, and how companies can strategically position themselves for international investor engagement. That's all from my side. Thank you.